Alrighty, welcome back to Weenie Trades. So in this video, I'm going to be giving the weekly game plan, and the weekly game plan this week is just going to be a lot of earnings. So we've got tons of earnings going to be released, and I've got a few of them from my watch list, a lot of them from my watch list actually. And when it's earnings season, I generally want to focus on the individual stocks. The volatility on those individual stocks instead of the index is going to be so much better, especially trading after earnings. Again, trading before earnings, it's a complete unknown event. Before earnings, the stock can rip up, then come back. The stock can rip down, then come back. The stock can go sideways and then go. There's so many different scenarios, but after earnings, the volatility is really good. And so we want to capitalize off of that. We want to watch out for expected moves. I'm going to talk a lot about expected moves on these stocks and how we want to see the range that stock can potentially go. So I'm going to be talking about the earnings trades potentially, and I'm also going to be talking about the upcoming options course, which is super awesome. It's coming out May 1st, super fun, and I'm going to definitely be looking for a lot of feedback because I'm just building out what I know. I'm going to be continuously adding to this because there's so many options going around. Options is where I tend to excel at in the market. I'm a much better options trader than I am a share trader. And that's because you can really get some good risk to reward setups if you can capture the right market environment. Going up, going down, going nowhere, going slightly up to nowhere, wherever it may be. So that's kind of the agenda for today. So let's get right into the earnings. Right now, I'm going to be talking about the expected moves. So Spotify reports. I think Spotify reports on the 28th. Spotify's expected move is plus or minus $24. And if you're ever wondering where I get that, I'm grabbing the weekly option chain and I'm just looking at this plus or minus 24.70 area. So that's where I get the expected move. That means Spotify is expected to move about $25 higher or $25 lower. So that kind of would put Spotify in that type of range. Keeping an eye on Spotify, there's a lot of resistance up here on Spotify, so that could be a mean reversion type of trade if Spotify gets overextended into like 320s, 330s. Maybe there's a short trade to be had. Maybe it doesn't go $24 right away after earnings, and then we can trade it after earnings. So tons of great moves. Keeping an eye out on Spotify and keeping an eye out on AMD. AMD, this bubble was, I was explaining a back ratio in one of the options videos. Super cool option strategy. You can make money if the stock explodes down, or if it just goes sideways slightly higher, you still get paid, but you lose money if it stays within a range within the purple. So it's kind of like a strangle, but it's on the premium selling side of things to one side. Super cool stuff. Actually, no, it's a double premium buy, but that's besides the point. That's the Jade Lizard. Gosh, there's so many option strategies. But AMD plus or minus $6. Watch out for $90 resistance. So if I just clear this drawing set, this whole area up here, $90 to $95 is going to be a resistance zone, but AMD's in a nice good wedge. AMD could break to the upside or AMD could break to the downside. So obviously it's in that pinched range. And if it's pinching into earnings, that means earnings could be a decent sized breakout. So maybe AMD breaches that expected move a little bit by that plus or minus $6. But I'd rather trade AMD after earnings, as AMD has such good volume, such good liquidity, especially for options. And there's tons of different moves that we can do on AMD after we find the report. So stay tuned for most of these are going to be setting up after. You generally don't want to trade before. There's not really a big edge in trading before earnings. Stock can report something good, stock can drop. Stock can report something bad, stock could go up. And then there's all this ambiguity. Stock could go nowhere when it was expecting a big move. So it's just better to trade after earnings. But it's curious to see where they can potentially go and look for some mean reversion type techniques. So here's NEO. NEO reports this week. Plus or minus $4 expected move. I think that's a little bit small. That puts NEO at about 46 on the upside. 46, 45 even, just $4. Yeah, $4. 45 on the upside. 36 on the downside. So 36 on the downside, 45. I think NEO could breach that 45 and maybe test something like 50 if they report something really good. So that's something to keep an eye out for on NEO. But NEO, again, it's kind of like is it some make or break it point for NEO? Sometimes the earnings can fuel that technical catalyst to the next move higher. And we could be having a W pattern, inverse head and shoulders, whatever you want to call it. But time will tell after earnings. Maybe NEO only moves like $1 or $2. That's what we're going to be keeping an eye out for. Google reports earnings this week. I think Google can kill it on this next report. As you can see, we got a lot of technicals here on Google. Looks super bullish. Another bull flag in front of earnings. Google has an expected move of plus or minus $110. So that would put Google at, 24.10. I made a whole video on Google earnings in the options course, how it could be potentially interesting to explode higher based on the Google's revenue service, potentially be, Google and YouTube, the money that they get from YouTube might be a bigger market share of Google's total revenue, and I think that can explode the stock higher. I think YouTube is taking off, which means Google's taking off, in my opinion. But again, I'll probably just trade it after the report, but I'm not afraid to potentially nibble some on a good or earnings report after it's reported. So keep an eye out for Google. I think it can move a little bit more than $110 because we've moved $110 without earnings just, over here in just 3 days. So if it can move $110 in a week, with earnings, I think, and, it can move even more than that in less time, Google might be able to outperform on this earnings report. Again, I'd rather wait and see what it does after. RCL, Royal Caribbean, earnings were RCL plus or minus $5.80. There's nothing really interesting there. I bet RCL stays potentially within that range, and we just keep on tightening up before we break up or we break down. So that'll be RCL. Apple reports this week. What do you think about Apple earnings, Bryce? You think Apple's going to do well?
Yes.
Yeah? You think they're going to do well? You think they're going to beat the estimates? Apple also looks bullish, bull flag. Now, just because they look bullish before earnings, this can all change. And so that's why I'm still focusing on the individuals as I'll talk about in the overall markets a bit, the QQQs. The Qs, it's a little bit difficult to follow the direction when we got all these FANG stocks, these big tech stocks reporting. They can move the QQQ each one way or over another, and so the technicals matter a little bit less until we see the price action after the news. But Apple, plus or minus $6 move. I duplicated this bull flag, and that puts Apple in a few weeks potentially at 152. But that's just an arbitrary extension from that flag. But it is very symmetrical, and market symmetry could play a role in Apple into the earnings. Again, 130 could be a downside break point for Apple, and I think it could potentially breach that expected move to the downside a little bit if it started to do that, and maybe Apple tests something like 120. But we'll see how Apple trades after earnings. Super excited to see Apple. Boeing reports. Boeing plus or minus $12. Boeing, I expect it to potentially just stay within this pinching triangle. I don't know if Boeing will break out just yet. We'll see. The market's a little bit dicey. It's a little bit whippy. It's very undecisive at some of these higher prices. So that's something to think about, that these stocks could just continue into their tightening range. So that's Boeing. This week, Facebook reports. Facebook, we have a nice good bull pullback. So look, move up, flag it, counter trend, whatever you want to call it. There's your pop. Now we're doing the exact same thing, basically at our old all-time high support. So if Facebook starts to pop, Facebook's expected to move plus or minus 17.27. So Facebook could move down $17. Facebook could move up $17. And if it moves up $17, I bet it starts to breach the upper expected move, because all-time highs, ATH, tends to break out a little bit past that expected move. So stocks have an advantage when they're at or near all-time highs, and they have a positive news catalyst, and the market is, favoring it. The Qs are bullish. That's where you can get some really good breakouts. Otherwise, if not all of those variables are there, it might just snap back in and just kind of fizzle out and maybe just, go just sideways or something. Or maybe it snaps down, moves back up, maybe it moves up, snaps back down right away. So that's something to think about. You need all factors in your favor to get clean breakouts after these earnings releases. And so that's why it's really important to wait till after that report. We can see how the price action trades. So that's Facebook. Microsoft reports earnings. MSFT, nice good bull flag yet again. It seems like I'm looking at the same chart. Microsoft really relatively strong. Microsoft plus or minus $10. That would put Microsoft at about 270 on the upside. Or if on the downside, that would put it at about 250, give or take a couple of dollars. But those are general areas to watch out for. Otherwise, on an extreme sell-off, I'm watching 245 on Microsoft to grab a dip. Maybe I can catch that if it flushes first on earnings. risk off of 245. There's tons of trades to be had with earnings season. You can trade it after the report, find your key levels. Gosh, the volatility is so great. And this is all I think I need to focus on this week is who cares about the next new shiny object when we can trade these beautiful earnings moves afterwards, of course. And then Tesla reports this week, a little bit of an evil omen because Tesla's expected move is $66.67. So 666 on Tesla. Bryce, Tesla's expected move is 666. What do you think that means? Does that mean Tesla's going to go up? Because we're pinching into earnings. We have our high. We have a, we're higher high, bull flag, pop. And we're starting to really pinch into this tightening range. Let's see what happens to Tesla after earnings on Monday. 666. Is it a bad omen or is it just superstition? Nah, I don't believe in superstitions. We're likely to break out, though, some way on Tesla because of this pinching pattern. There's a lot of risk being accumulated on both sides of Tesla. So keep an eye out for that. Plus or minus $66.60. So just keep an eye out. If you think Tesla can move more than $66, that favors option buyers. Again, but you've got to expect your options can go to zero if you're going to trade options before earnings, right? But if you expect Tesla can go higher, greater than that, then buying a call would be more beneficial. If you think, Tesla can move more than that to the downside, buying a put might be, that would be the winner in that transaction. So just something to think about on Tesla. And then lastly, let's talk about Amazon, AMZN. Amazon, nice, good bull flag, still consolidating near the highs. Amazon really hasn't done anything all year. And we've got earnings coming up. I remember an earnings call where Amazon just rocket shipped. It went from 3,000 to 3,400 in 3 days. So Amazon can really get some legs. And we're in a nice, good weekly bull flag. We're in a nice, good, monthly bull flag. If we look at this, we're coiling up in this whole range, rally, and now we're basing up here, forming a new area of value. And it's correcting through time right now. Amazon is corrected through time. I really would be surprised if Amazon broke to the downside, but it's always a scenario. If Amazon breaks to the downside, 2,000 is a dip buy. If Amazon breaks, over 3,500, we could see some really good moves. Amazon's expected to move $152 this week after earnings. So keep an eye out on Amazon. If I start getting these dings off when Amazon's breaking up there, I'm definitely probably going to be in a trade on Amazon. So that'll be super exciting. I'm going to be using the QQQ as a map for all this. So the Qs, most of the tech, this is mostly tech sector, a little bit of semiconductors and others, but, cruise lines, but QQQ, nice, good, just keeping an eye on the Qs. If the Qs are, if half of those reports are good, half of them are bad, Qs goes sideways. If all the reports are good, Qs pops. If all the reports are bad, Qs tends to drop. So that's something to keep an eye out for, just using it as a guide and a map. So that concludes this week's game plan, and now I'm going to get into questions from the lovely course members. Super excited for the options course coming up, and they are ready. See you in the next one. Bye-bye.